Hello, everybody. Today we'll be looking at the global coming recession, or the fears of the global coming recession. But first, of course, let's update here on Bitcoin. Here we are in the daily. We recently broke above this trend line that we've been talking about. It's really a tale of two wedges here. We've got a wedge forming from this. We have this larger wedge we talked about, and then we have a wedge forming between the top of that wedge and this ascending trend line, which has proven to be pretty relevant recently. So we're actually just above it right now, holding a little above 10.5. Basically, if in the coming day or so, if we can, the bull scenario would be to push up above this blue line and ideally up above 11,000. We want to see a bull break up out of this. If we fail to do that, if we break down, we have a little bit of support again in this range between 10.2 and 10.4. But I would suspect if we lose this line, this trend line, that probably won't hold us for too long. Then we could very well see a dip back down to the 9.5 range. And then, of course, we might be having some more sideways and tightening wedge action before inevitably it has to break out. Of course, the bear scenario is if we lost 9.5. The support there has been so solid that I'm not too worried. Things are looking a little more on the bullish end. We just recently had a MACD cross, which is a very bullish sign. There have been minor MACD crosses before. It's not a guarantee we're going to break up, but it's looking positive. We want to see maybe some more buy volume come in first, but if we can basically not have a break below 9.5, then it's really just a matter of time, whether it happens the next day or two or over the rest of the month before we break up here. Once we get a solid break above 11, there's a good chance we'll touch right quickly up to about 11.5. But higher than that, there's not a ton of resistance, but I wouldn't be so quick as to say that we're going to rocket up to 13.5. But if we can clear 11 solidly and then 11.5, the path isn't too cluttered up to 13.5. So that's it in a nutshell. Watch for a break up above 11. Watch for a break back down below 10, basically, to take us back down to these levels. Below that, yeah, there's some resistance at 8.8, but let's wait to see if we even lose 9.5 first. So, on that note, I spoke last time about how I was going to basically take a deeper look at what's going on financially, and I wanted to talk specifically about the recession fears that are going around. My colleague Will has talked about some of these stories recently, but I'm going to synthesize several of them, talk about kind of why people are concerned quickly, and then, of course, tie it back into cryptocurrency and see how it might affect the crypto market if this recession does rear its ugly head. So let's look at some stories. So to have a broad overview, I have this article from CNBC, a list of signals, basically, that are flashing red, as they say. Reasons why people are concerned. Starting off with simply Google Trends. Now, this isn't the most technical, but I do think it's a reasonable gauge of how people are feeling. Basically, Google Trends has shown that a lot more people are Googling the word recession lately. That's neither here nor there, except that people are scared, basically. So the bond market inverted yield curve. Now, Will did talk about this. All you really need to know for our purposes is that it's essentially 2-year bonds are now showing a higher yield or projected yield than 10-year bonds. Why this matters to us is that generally a recession occurs about 22 months after an inversion on average. So it's basically just a warning sign for a coming recession. Now, this one's more U.S. focused. We're definitely going to go more globally in a second, but this is CNBC, so, gross domestic product of the U.S. is on the decline. It had a really rough quarter 2 quarters ago, and the last quarter wasn't looking too great either. Corporate profits, the jaded person in me immediately want to be like, oh no, corporate profits, but it's a meaningful metric of our economy. It's not just whether the rich are getting richer. That's a whole other discussion. We got the manufacturing decline is basically going. Basically, we're seeing a decline in manufacturing. We're seeing a decline in freight shipments. We're seeing the price of copper decline. Gold is on the rise. Now, that's very relevant to what we're going to get to in a second, and I'm sure many of you already can see where I'm going with that. And the Global Economic Policy Uncertainty Index, basically looking at a variety of economic policies and also what people are saying about economic policies, even news coverage, seeing how much uncertainty is out there in the market or in the perceived market. It's at a pretty high level here, as you can see. So that's just an overview of some of the things people are saying. There's a lot of red flags out there. Of course, we have a U.S.-China trade war happening. I have no interest in discussing the politics. BBC News here does a decent job of kind of just talking a little bit about what's been going on, how it escalated, and what it might mean. But in a nutshell, it's not optimistic for U.S. or China for their economies. And of course, that means it will ripple out into the larger global economy. It has people fairly concerned, understandably. And then we have the World Economic Outlooks Report, the most recent one from July 18th, 2019. In a nutshell, global growth remains subdued. There's some basically details about how the percentage of growth is lower than expected. GDP releases so far this year, together with generally softening inflation, point to weaker than anticipated global activity. So you see, I'm not here. In future videos, I might go into some of these in more depth, but I wanted to make the larger case that people are concerned that a recession is coming, and things point to that a recession is coming. We're not in a recession yet. It's just that idea that we're seeing slowdown and that after a long period of growth, and signs point to that this is going to continue. And I don't, nor do I see any articles that point to any specific catalyst that would save us from this for the legacy economic system. So the question becomes, obviously, the big question, how is crypto going to perform in a recession? It evolved out of the last recession, but it's never existed through one. Really quick, we've talked about this before. Two views. Bitcoin's going to do exceptionally well as a hedge against a global recession, against currency collapses and such. That's not an invalid view. We've seen some evidence of this before. I've got a CoinDesk article here that kind of makes a case for it. It lays out some recent historical examples. The Greek financial crisis a few years ago, 2015, we saw people turning to Bitcoin after the government clamped down, or the banks clamped down on their local money supply. We see when China devalues their own currency, we see people, and the price of their currency drops, we see people shift towards Bitcoin. And with Brexit coming, well, both with what has been happening for the last few years with Brexit and what's coming very soon, presumably by October 31st. Again, not time to really get into all that, but something's going to happen very soon. Again, there's an increasing amount of faith in Bitcoin over the euro or the pound sterling. So it looks like Bitcoin could be doing well as a hedge, but there's the counterpoint that why, especially as things get more rocky, would people put their money into an unproven, new speculative asset? And I think that's a really valid point. But I think that you're talking about something a little bit different. We can't apply the same logic to both Bitcoin and the whole of cryptocurrency. They're not all the same. They're similar, but they're not all the same. We have seen over the last year or so that Bitcoin has performed very well. It seems to be, as things have shifted, there does seem to be a lot of strength. I mean, this is, of course, I'll show you this one, but this is the market capitalization. But you also are well aware with the previous chart I showed you that the price of Bitcoin has been doing pretty well this year. And although altcoins haven't been keeping up, this is not news. But here's my point, both why this might be happening and why this might get worse. My colleague Will did a video just yesterday about some views on whether or not there's ever going to be an altcoin rally. This is tied to that, but I'm not making the exact same point. I'm saying that what we might be seeing is Bitcoin performing as we'd hoped. Digital gold, a hedge against other fiat traditional legacy currencies. However, there are some other cryptos, obviously, that act similarly. They're decentralized. Nobody controls them. They are based off of just the nodes and the miners. Forks of Bitcoin, some other coins that aim to be stores of value or exchanges of value. They might perform well, too. It could be interesting to see. This could be the chance for something like a Bitcoin Cash to prove itself at a time during a recession when, if it can outperform Bitcoin, I would say now or soon, if there's a recession, would be its chance to do so. If it cannot, then it's hard to see how it would be able to on the other side of a recession. Now, let's talk about coins that aren't like that. Let's talk about almost every other crypto that has, like Ethereum, Ripple. We talked about this a little bit with the last video with Ripple. Many of these coins have either teams, companies, projects, people who need to get paid to develop, to build, behind them. They have companies, they have systems that are based off of the legacy fiat system. People need to get paychecks to continue doing their job to build these systems. Bitcoin doesn't have that. Nobody needs a paycheck for Bitcoin to keep working. And again, there's other cryptos like that. But Ethereum isn't exactly a company behind it, but it needs companies to come in and projects to come in that will presumably have employees who need to get paid in order for its ecosystem to grow. So in a real recession of the legacy system, all of those are going to be hurting a lot more than Bitcoin is, because they need that legacy system for now. They're still building and growing, and they're going to take it kind of hard if the global economy shrinks or worse. And so this is where we might see kind of a separating the wheat from the chaff. I'm not a Bitcoin maximalist, and I don't rule out the possibility of another coin usurping Bitcoin, but many of these other types of cryptocurrencies, the ones that aren't that strong aren't going to make it. And it's really going to show, I think, the coins, even the coins that are going to make it, might struggle during this recession, but they'll survive and come out the other end, presumably stronger and presumably ready to kick some ass after that. But the ones that aren't really there, that can't keep up, that can't prove that they're better than their most direct competitors, they're probably not going to make it through a recession, plausibly, because they will fall into that category of why would people put their money into them when they're so unproven, when there's similar but more proven products out there. Now, I'm not going to sit here and name names. I don't know. Any coin that's still surviving and doing okay out there right now has a chance, I would say. But I do think that if this recession hits and gets into full swing in the coming few years, that we're going to see a test for crypto, a trial by fire, the likes of which even the last bear market didn't give us. And we're going to see Bitcoin or another coin or a small collection of coins rise probably as the actual hedges, as the actual new forms of either stores of value or exchanges of currencies. And or we'll see some other coins rise that can perform and give good use cases and maybe act as more than a store of value, but the coins that are just kind of frivolous or copying other coins or just can't quite develop fast enough, they're going to fall off. Watch for that. I don't know which ones it's going to be. You're going to have to analyze your own portfolio, the projects you believe in, and decide what you think you want to take your chances on. That's pretty much that. If it comes to the head, we're all going to have to look out. And once more, that'll do it for me. As I'm always saying, not investment advice, just my personal opinion. Do your own research, make your own decisions. Come back next week. I'll probably be talking about Bitcoin Cash as it's the next down the line in terms of market cap. I'll tie back almost certainly to some things I said here today, but I'm also going to focus more on technicals, where it's been and where it might be going. So watch out for that. Until next time, don't forget to like and subscribe. Good luck with those trades.